When you sell an investment for a profit in a general investing account or a GIA, you will pay capital gains tax on the sale. However, if you sell an investment for a loss, you can use that loss to offset the amount of tax that you will pay on the capital gains. This process is called tax loss harvesting. If you don't understand how this works, don't worry, it is a confusing concept and there's not much information out there to explain it. So, without wasting any more time, let's get right into explaining what you need to know. First of all, it's worth mentioning that you can't take advantage of tax loss harvesting if you invest in a stocks and shares ISA. If you haven't maxed out your stocks and shares ISA contributions, then you should do this right away. Basically, if you invest in a stocks and shares ISA, you don't pay any tax on your capital gains. If your stocks and shares ISA is already maximized, then you will be investing in a general investing account, also known as a GIA. This is an investing account in which your capital gains and dividends are not tax sheltered. Whenever you sell an investment for a profit in a GIA, the profit is known as capital gains. When you sell an investment for a profit, this is also known as realising gains. In the UK, you have a capital gains tax-free allowance of up to £12,300 in the current tax year. Any capital gains above £12,300 will be subjected to tax, depending on your income tax rate. I'll leave a link in the description where you can find out how much tax you would pay on your capital gains on the government's website. The best way to explain this is with an example. Let's say you have an income of £100,000, so you are a high rate taxpayer. You sell investments for a profit of £22,300 in the current tax year. As you get £12,300 of that capital gains tax-free, you will have to pay tax on the remaining £10,000. As a high rate taxpayer, this would be 20% tax, which translates to £2,000. That's a lot of money to be handing over to the taxman. This is where tax loss harvesting comes in. Tax loss harvesting is a process of selling your securities for a loss to offset a capital gains tax liability. Basically, to reduce the amount of tax that you pay on your capital gains, you can use your investments which you sold for a loss. The loss from some of your investments can be subtracted from the profits of the other ones to reduce the amount of tax that you will pay. Again, the best way to explain this is with an example. To keep it simple, we'll look at the same example from before where the investor would be paying tax on £10,000 of capital gains. However, this time, the investor sold some shares in a company for a loss of £8,000. This £8,000 can be deducted from the £10,000 of capital gains. That leaves £2,000 of taxable capital gains. As the tax rate is 20%, this means they will be taxed £400. If you want your losses to offset your capital gains, just as we did in the example before, then you just need to include them on your yearly tax return. If your losses are larger than the capital gains that you have realised, then these losses can be transferred over to future tax years. Also, if you don't have any capital gains to offset at all, you can still transfer these losses over into the future. The losses can be reported up to 4 years after the end of the tax year that you realised them in. Many people use tax loss harvesting to sell their investments that are down to offset the tax that they will pay on their investments that are up. The question is this a good idea? Let's take a look at some of the key considerations that you should consider when thinking about tax loss harvesting. One thing that you might be thinking is, can I sell my investments for a loss, buy them straight back, and then use that loss to offset my capital gains tax? The simple answer is no. To mitigate this nifty trick, there is something in place called the wash sale rule. The rule defines a wash sale as one that occurs when an individual sells or trades a security at a loss and within 30 days before or after this sale buys a substantially identical stock or security. A wash sale also results if an investor sells a security and the individual's spouse or a company controlled by the individual buys a substantially equivalent security. Basically, this stops you from selling your shares at a loss and then buying the same shares back within the next 30 days. Some investors will work around this rule, so they would sell their investments at a loss, offset their capital gains, and then after the 30-day period, they would buy them shares back. You can either do that or invest in a completely new company within the 30-day period. So, the bottom line is, if you have any realised capital gains that could be taxed, and you have any failing investments in your portfolio, you can sell your way out of those positions without really taking a loss. In our opinion, it's not worth to sell your position just to offset taxes from your gains if you still believe in the investment that is currently negative. By selling the investment, you are locking in the losses and losing the money that you originally invested. Although this is deducted from your capital gains, the net result is still zero. Basically, we think it is a bad idea to sell out of an investment for tax reasons only. It shouldn't be a deciding factor. However, if you are planning on changing your asset allocation anyway, then you should utilise tax loss harvesting. If you already plan on moving out of a losing position, then you should utilise tax loss harvesting and use it to offset your capital gains tax. We basically think that tax loss harvesting should be used as a bonus tax relief when it is available, but it should not dominate your investing decisions. Make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK for more saving and investing content every week. If you found the video helpful, smash the like button and share it with a friend so that they can learn about tax loss harvesting too. If you have any questions related to tax loss harvesting, ask them in the comments below. Thanks for watching.